Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Hey everybody, Coach D with TackleTrading.com here to give you a quick market recap and an update. Today, Wednesday the 29th, we had the FOMC meeting minutes today, and the market really didn't react. We want to make sure we're in front of the market for the FOMC. When they talk, they can definitely move the markets. However, the market's reaction to the FOMC today was pretty nominal. Now, I challenged a lot of you to sit in front of the market this week and see how the FOMC can move the market. And so to really get a good feel for that, you'd want to watch one of the main market indices. You'd want to watch one of the major exchange traded funds to get a good feel for how it moves the market. So here I've got the spider and I put it down to a 5-minute time frame. And you can see that the market kind of traded down a little bit until it got really quiet, and it got very, very small movement for the hours leading up into the announcement, and it got a little bit of a dip right before. And right here, you can see where the volatility picks up. The biggest moves for the day and the volume really kicks up right at 12 o'clock Mountain Time, which was 2 o'clock Eastern Time when that announcement came out. And you can really see that volatility shake up here. Now, to get a good look at that on the, let me go pop open Thinkorswim real quick here and put in a chart of the futures. Let me pop in the E-mini S&P, and I want to show you how the futures reacted on that. And let me go change it from a daily time frame. Let's get that down into a small intraday time frame. We'll go down here to about 5 minutes. And here you can see the same thing. Let me go ahead and zoom in. Overall, the market's movement throughout the day was pretty quiet. Here is the market open. The overnight movement was up until this point sideways. It drifted and then came down a little bit before the announcement. Sideways, 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 quiet time. And so the way you could trade that is you could look for it to break below or to break out on the news announcement. And if you have a really quick trade, now in this case, it shot down and it kind of whipsawed. So it shot down, up, but the volatility really kicked in again right there at that witching hour when the market decided to move. Now, take a real quick look at the dollar index as well, and we talked about how the Fed moves the dollar. And do you think, bam, right there, we got a huge move on the dollar shooting up right as the Feds made their announcement. This is on Central Time here, and just shot up through the roof, just ripped up. And while we were doing a podcast today, I was on a podcast with Matt Justice for the Trading Justice podcast, and he was trading the euro dollar during that point in time. And I'll tell you what, nailed the trade while we're podcasting. That's a beautiful multitask. Just want to send a shout out to Matt for pulling off a nice little trade on the euro, EUR, USD. And it broke down. It would be the inverse correlation. And so he caught the breakdown here short and caught about 30 pips according to that. So that's pretty solid move. Bam, and that's a news event trade. So those are pretty fun. Now, let's go ahead and drop back out and look at the broad market. And I still think that we have that potential downside movement. Let me quickly catch us up with a headline. The reaction to the Fed statement, signs of hawkishness, is what the Market Watch headline reads. Well, I don't know that it was really that hawkish. It sounded like they're going to keep the interest rates low, near zero for the foreseeable future is what they said. I believe they used for a considerable amount of time is the exact verbiage. You should go to thefed.org and take a look at that, at their statement and actually read it verbatim. It's about a 900-word press release. So the spider is hanging out here with a dark candlestick, quiet move, a little bit of hawkish sentiment. We've been wondering where a sell-off would come, and I put out some bearish trades earlier in the week, and the market hasn't taken that dip yet, but they're still set up for a nice little drop. So I'll throw out some bear trade candidates for us again. Let's take a quick look at the Russell. I threw the bearish trade on those earlier in the week, and I took the first trade, got stopped out on the way up. So that one got triggered. Put in a second trade in the midweek, and it also didn't get filled, didn't actually confirm down. We wanted it to confirm down. down, didn't confirm down. Now, if I wanted to take another stab at it, I could. And if I did want to take a stab at it, the only reason I'd really want to consider it at this point in time is it's set up in that trend zone. So that's kind of a ballpark trend zone. And I drew that line so it can confirm my bias. But it's also a known support resistance zone there at 1150 and or 115 on this chart. So that's a pretty reasonable technical setup for a bearish retracement. We really didn't see much other movement in the market. We could look at the NASDAQ was the top of the bunch, moving the strongest right into its own resistance. So the NASDAQ trading at resistance with the doji, and we've got the let's look at the VIX, $VIX here. See how the VIX is responding, and the VIX came to life a little bit. It's still down around 14, so not too shabby. I'm going to go ahead and put out some bullish trades and some bearish trades, and I've got a couple real good-looking candidates. I'm going to start out with a couple of my bullish trades. I've got Facebook. Came off of earnings. They beat earnings. And while I was looking at the web page over here for the market's reaction, I also saw a nifty little headline about Facebook firing on all cylinders somewhere down here, where they were really, they killed their earnings announcement, and I did think 90% increase in revenue, so they're really getting their marketing revenue in. And according to this analyst, Facebook is firing on all cylinders, and the dip in price is a buy opportunity. Well, I only buy into fundamentals and analysts' recommendations so much. So that being said, technically speaking, there's a gap. And a good trading technique is to shoot the gap, to buy as there's a good potential that the gap will fill. Last earnings announcement, it gapped up and filled the gap to the downside. It's very common for gaps to fill, and I'm willing to take a little bit of risk to find out, but I need confirmation. See, that's the thing that is always the key for us, is waiting for confirmation. So throwing out those bearish trades earlier in the week doesn't hurt because we didn't ever get the confirmation we wanted. I'm going to go ahead and look at putting in a buy order here as it trades up, and I'm looking to fill the gap, and I'm going to put a target in the ballpark of around $80. I'm going to use a stop loss to help me prevent any unnecessary losses on that. Target of about $80. To really get a good entry on this, I drop down a time frame. I'm going to go down into about a 15-minute time frame, and the reason I'm going down to 15 minutes is to look for my entry price. And I'm going to go ahead and look at entering in here at about 76. 50 is a pretty clean price. It would give me above this resistance point, and that resistance point. So I could leg into one contract at 76.50 would be my trigger. And then I would use about a daily ATR as a trailing stop loss. And my average true range right now is about $2.53. And that's up from its typical $2.30 some odd cents due to the gap. So I'm going to go ahead and place that, and I'm going to show you a different way to do a contingency order. But before I run off and place the order, let me show you some of these other cool trades that I've got for the bullish side. I got Ulta here with a cup and handle set up, ready for a breakout, trading at the all-time high. Got upside maneuver here, and a nice, really defied gravity, fundamentally strong company. Good upside potential. For a target on that, what I would target is on the breakout off of the cup and handle. I expect it to move about 100% of the cup. Target 1 would be about 129, call it 129.50. And target 2 is going to be out there towards 135-ish. Now, those are ballpark targets for us, and those would be pretty reasonable swing trade targets for a cup and handle breakout. I like Southwest Airlines. It's a forming cup and handle. It needs to come up and trade above the candlestick highs for a minimum confirmation to start into a trade, one leg into the trade. I would add a leg if it broke the existing resistance point and look to take profits pretty quickly on this one. I also went and found a retailer, Burlington Stores. Nice retailer, trading up here near the highs. It has been defying gravity where the market got beat up a little bit more. And retailer, going into fourth quarter, I would look for confirmation, and I really want to see it trading out here above 40.75, 40.80, maybe even 41 for confirmation. So those are my bullish picks. You can trade the stock on them. You can trade the options on them. You could do things like bull put credit spreads. You could even do, your debit condors and things on that. I got the pretty good looking list of short trades, and a lot of they're the same ones I put out earlier. I got LNG for a bearish retracement here. Good looking candidate. We were looking at shorting it earlier in the week and it never got the confirmation. So it's popped up. It's giving us another signal. Capital One Financial. The financial sector is certainly not that strong right now, and I've already kind of charted this one out. It's trading in the trend zone. Boom, right at the 61.8% retracement. So let me go ahead and clean those lines up here. It needs confirmation. We were talking about shorting it earlier in the week, and it never got confirmation. So raising my stop order to get in up is certainly okay. Raising the trigger price up, we would need confirmation below the candlestick low. We like that long upper shadow as part of our signal. And then I'd need to have a stop loss out above that, or using an ATR as a measurement. And then I'd probably also raise my target up on this one towards around 77 or so. PWR is just a dead sexy chart. Quanta Services, beautiful bearish retracement. Try not to get excited when you see this chart. Looking at this, trading into that big intermediate support resistance zone. It's got a slowing momentum pattern, a really good looking volume scenario on that. This is a low enough price stock that I would probably just go ahead and short sell the stock, do a trailing buy stop with the stock there, use a trailing buy stop, 1 ATR, a little bit more than that, and then targeting around 30 bucks. SanDisk also, try not to get too excited when you see this chart. We're looking at it earlier in the week with the small body candle, and it's set up a little bit better, and that increases your target zone a bit. We got a doji trading at the major pivot on the overall downward movement on the chart. Really like these chart candidates for great looking setups. You could again buy with confirmation, buy a put. You could short sell stock. You could do bear call credit spreads out here around 100, 105. Make sure you plan those trades out accordingly. You could look to see if you could price out a debit condor or a bear put debit trade, something along those lines. Now my next two picks are VGK and IEV, excuse me. IEV is the iShares European ETF, and it is a pretty good looking bearish retracement, and so is the Vanguard European ETF. So I got both of the European ETFs here with the bearish retracement. They look the same. With the rumors about the potential movement for the European Union into recession, higher probabilities of that, I like this trade. Now, the problem with some of these ETFs is you need to make sure they are liquid. And if they're not liquid enough, you really shouldn't trade them. So when I looked at these earlier, what I discovered was that the VGK was liquid, but the IEV was not. So let's look at the VGK. Learn to type one of these days, VGK. And I would look for that to give me enough volume and open interest is the key. It's got to have volume and open interest, and the other one just did not. So here I've got a lot of these puts outstanding here, 4,000 of them in open interest. I've got relatively narrow bid-ask spreads here. I got enough of those. I could go look at the delta to make sure I'm picking a good one. And I'm going to use a little bit of a different technique on this one. I'm going to put in a trigger order to buy if it's going down. That'll give me a delta of 0.65, and then I'll put in a stop order to make sure it exits if it goes out above the candlestick high. Now I could use either one of these. I could go with the stronger delta here if I wanted to, but I'll go ahead and use this one, the $1.70. That's pretty dirt cheap for the next 51 days. I could just buy one and let it go. Keep that as my trade and not make, I wouldn't need any confirmation, just not risk any more than that. But I'm going to go ahead and open up a ticket for that. And I'm going to go ahead and put in 2 contracts on this. Keep the position size small. I don't need to overload it. I'm going to do a first trigger sequential, and I'm going to create an opposite order for a stop loss. And I'm going to go ahead and to get into this one, I'm going to use a stop limit. This is a different technique than I've shown you in the past. And what I'm going to ask for is confirmation below 53, below the candlestick low. So I need that to trigger in below the candlestick low to give me confirmation that it's going down. Well, the way I'm going to do that is I'm going to take and I'm going to raise this limit here, and this is a really slick little tool here that's going to require the stock price to go down, and I'm going to get it down here below 53, and I will be spending approximately 185. I'll go a little bit higher for 190, and then I'm going to set the stop at 190. raise the limit another 5 pennies from that. And then I'm going to put a price contingency on it here to make sure that that doesn't get triggered by some random bid-ask spread thing. I'm going to say, hey, make sure that VGK's mark is at or below $53. And if it gets to below 53 bucks, it's going to kick that trade on, and then it would require the option stop prices to get hit. And I'll go ahead and click on OK. And I can make that good for the day or good till canceled. I'll make it good till canceled. I'll link these two together. And then I'm just going to use a plain old stop loss, and I want to get my stop out above 54, above the candlestick high, and I will change the price down here, and I'll use this little expected price calculator to help me determine that. So I'm going to go ahead and bring that down to until I get to about 54 and change. That means it's going to be just about $1. I'll go ahead and set it down there at $1. So here's my thought on this. To give it a little bit of cushion, I'll give it that 95 cent, and I'll make that now a stop limit, and I'm going to require it to trade below $1 and not sell it for less than 95, and theoretically it would have to go up a little over $1, and that's really in sync with the stock's personality. The average true range is just 87 cents. That bearish engulfing candlestick's a little over $1, and I've got about $1 risk on the trade, and so doing 2 contracts would put me at $200 of risk. Now, for the upside potential, if we were to see the stock drop to my target of 50, let me go ahead and analyze that trade real quick so you can get a make sure you understand that. And I would be paying a little, $1.95 for that, and if it drops to my target of 50, I've got a $478 potential return, not accounting for the minor time decay that you would experience. So I've got the 2-to-1 ratio on that, and I feel pretty good about that. So I'm going to go ahead and open up that order ticket and go ahead and hit confirm and send. So we got that in there, bam. I could do the exact same thing with the Facebook trade, Facebook, FB, Facebook, and put in a contingency. I want to make sure that on Facebook I'm trading up above the candlestick, the intraday price action there. I think I was saying about 76.50 for my trigger. So for my trigger price, 76.50. I do see one thing here on Facebook that I thought was pretty interesting. I got about twice as many calls bought today as I have puts. Twice as many calls bought as puts the day after earnings announcement. And I could go pick some longer term options, December's or January's. I'm okay with. I want to go with high. For just filling the gap, I'll do the December's. I want high delta, and I'll use these here with the 15-cent bid-ask spread. I'll click on the 540, and I'll do the same thing. I'll make it a stop limit, and I'm going to raise that limit price until it gives me the confirmation I need at 76.50. There it is at 76.60. So my trigger is going to be at 590. So I'm going to buy it at 590, and then I'll have it submit a limit to make sure it doesn't spend more than $6. So I'm going to be spending $6 on this, and then I will do that good till canceled. I'll go ahead and create an opposite order. After I do, I got to do a first trigger sequential here. Create an opposite order. And for my stop loss on this, I'm not going to want to hold on to it if it dips below 75. And this is more of a 1-to-1 type ratio. The average true range is about 250, and so I'd probably want to use something along those lines. Let's go ahead and we'll bring that limit price, just to make sure we get it, down. And we want to see that limit price down in that $75 ballpark. Let's see the low price here, $4.78, and that would put an exit down around $4.75. That would put my risk at about $2.25. So I'll go ahead and just limit that to 1 contract to make sure I don't overexpose it to a pain threshold. That needs to be a stop order. I'll make it a stop limit, so it'll be the stop at $4.75. And a limit to make sure that it doesn't, and I put that usually a little bit lower. We got a 10-cent bid-ask spread. That'll go ahead and see if we can get filled on that. Might want to go 65 just to make sure it doesn't get it for less than. And then I'll go ahead and put a price contingency on that, just to say again, make sure that Facebook is trading at or below market price on that, out of the market order at or below 75. That would trigger it in that ballpark. And I could do the same thing on the confirmation for the price action to the upside. make sure that we are triggering above the mark price. So we'll go Facebook, mark, at or above, and in this case I wanted it to be above again 76, 75, 76.50. So at or above threshold of 76, and I'll have that one turn on around 76.40 so that it'll turn that trade live and send it in as a buy stop limit. And I'll go ahead and click on OK. And as I send these orders in, what you'll see is that they actually show up on your chart. And let me get this to a daily time frame here so you can see that. So it's going to have my buy stop, and I would probably target around 80 bucks on this one. Look to take the money real quick with a stop loss, and I'll be looking to adjust that up. And then on the other one, the VGK, we have the same basic scenario there. Sell, stop to get in. It's actually a buy stop for the put and a stop loss up above it. So we manage our risk and position size that way. This is Coach D with TackleTrading.com. Hope you enjoyed this little demonstration and these stock picks. Put them to good use. Always make sure you use confirmation. And just remember, this is a game for grown-ups. That trading does involve risk, and when we have ourselves getting exposed to risk, it's important that you learn to manage it and mitigate that, so that when we make the gains, they're that much sweeter. See you guys online.
Isn't it time you got off the sidelines and tackled trading? Join our online community of active traders where we make it happen every day. Stocks, options, futures, and Forex at www.tackletrading.com. Get in the game.